Welcome to our September quarterly update. It's probably worth reflecting on our comments of last quarter where we highlighted the status quo in financial markets have been maintained for quite some time, but we actually thought that that was coming to an end and that the price movements would be very different going forward than what we've experienced over the last couple of years. And that certainly came to fruition during the September quarter, the big movements being commodity prices and the stronger US dollar. Commodity prices have been correcting since about May. We see iron ore on the front page of the paper, but what most people might not realise that it's right across the commodity spectrum. Corn and wheat in the agricultural commodities have fallen 30 to 40% over the last 3 months. And then towards the end of the quarter, we saw oil join in and finally crack through $100, and now it's trading at about 85, and again off about 30% from its highs. My suspicions is that it's just a reflection of slowing Chinese demand, but the relevance of the falling currency is obviously we highlighted that previously as a catalyst for the elevated currency to decline, and that in fact did happen over the September quarter, particularly in the month of September. Big fall in the Australian dollar, and it brought into focus our previous comments that we thought with an elevated currency and better relative value in stocks overseas, that investors should be moving a lot of their equity investments offshore. And in fact, in the month of September, again, it was highlighted, if you look at the global equity fund, it was up about 7.5% in stark contrast to the 5.5% fall in the ASX. So big relative change in the month of September. In terms of the currency from here on in, it's now I think around about 87, 88 cents. Still think it's overvalued by about 10% relative to where commodity prices are at the moment. And to get that extra movement is going to require a movement in relative interest rates, stronger US economy, and therefore rates going up in the US. So we still think the currency is overvalued, but the timing of the next move a little bit more difficult. In terms of what we're doing on the stock side, we've also highlighted that with stocks having been at their highs, we wanted to be patient and wait for individual stocks to kind of decline 10 or 15% to put our remaining cash to work. The last couple of weeks, in fact, we've seen the market actually start to get a little bit more volatile. It's pulled back, stocks are pulling back, and so the strategy hasn't changed. We still fully expect to have all our cash invested by the end of the year. We're slowly chipping away, and in fact, this pullback in stocks is what we've been looking for, and hopefully, as I said, it'll give us the opportunity to go to a fully invested position. In terms of what we're buying or what we're looking at, we alluded to it last quarter. Again, no change. We'd ideally like to add some more consumer branded names to our portfolio. We still think they're a little bit expensive. Interesting over the quarter that SAB, we've highlighted the consolidation in brewing. SAB actually made an approach to Heineken to take it out. It was rebuffed, but again highlights that there's going to be further consolidation in the brewing ultimately. Other areas of our focus, exchanges, the banks, technology for pharmaceutical. Ashley and Uday, our portfolio managers, have actually spent 3 weeks on the road recently, just finishing off some work in terms of those stocks. Again, we fully expect that some of those stocks that we've been looking at will find its way into our portfolios over the next month or two. It's obviously going to be difficult when markets come back. You always get a bit nervous that it's going to come back a little bit further. But bottom line, we've been pretty clear about our strategy. Fingers crossed that we'll be able to buy them at prices that meet our criteria. Apart from that, not a lot to talk about. As I say, I think it's always worth reminding people that when markets do get a little bit volatile, it's not the time to back off. It's the time to stick to your discipline, and as I said, we've been very consistent about slowly moving to a fully invested position by the end of the year. So it's now October, so we've got a month or two to complete that, and it looks as though it's on course. So I suspect when we do our next update in December, we will be in fact fully invested, and we'll give a bit of an update on some of the new positions that have been added to the portfolio. So with that, just a reminder, if there's any other questions that sort of pop up, again, feel free to email Rob Thompson, and we'll either email back our response or include it in the next quarterly update. So thanks for your time.